Ask and it will be given to you. Seek and you will find. Knock and the door will be opened for you. For everyone who asks receives, the one who seeks finds, and to the one who knocks the door will be opened. Today I made exactly $1,579.62. But how did you manage to do it in these conditions? Well, I'll tell you exactly how, bro. Going into the 4 hour, we were obviously bearish, bro. I'm not going to hold you. Daily fair value gaps, 1 hour intermediate highs, etc., things of that nature. We also hit this daily intermediate low by, I'm not kidding you, bro, 1.25 measly points, bro. Don't believe me? Well, go look at it yourself then, okay? So we go into the lower time frames. What exactly am I seeing? What am I looking at? What's appealing to me? Well, at literally 9:29, we are edging a 1 hour fair value gap more than I've ever seen in my entire life, right? This is what I call an MDAL, bro. Mutually agreed upon DOL. That's what I say when I journal, at least. Mutually agreed upon DOL means this. Yes, even if we want to continue being bearish, we at least need to get a rebalance play. So for that reason, although we had swept this major liquidity, because of it, I should say, I was open to taking longs, but only in the short term. Long term, I'm obviously still super bearish because look, bro, we've just been dumping. We've been dumping. We completed this crazy market maker sell model. It does look good. We could start ripping back up to all-time highs, or Donald Trump could, I don't know, nuke Asia, the entire continent of Asia, and then we'll be screwed and the planet will be over. Who really knows? I was going to say who really cares, but of course I care. And the 50-minute, you see the same thing. Really, we're just dumping, but there is definitely room to improve. Now, I do want to say this. Because of these conditions, right? Like, yes, we have met the monthly objective or whatever right over here. And yes, we have LRL. And yes, we do have a daily unmitigated gap above me. So, Clayja, baby, how are you going to decide if you want to be bearish or bullish? I let the market tell me. I go from the high to the low, and I mark it out, and I see EQ, right? Obviously, I end up marking out EQ right here, EQ of the range. And what EQ of the range will tell me is, yo, if we respect EQ of the range and get displacement down, then we are bearish. Now, if we blast through EQ of the range and we start going towards these DOLs, then obviously these are valid draws as well. And what made this day so difficult is that there was valid draws on each side. So how do you trade in high resistant to high resistant markets? Like today, high resistant as heck, bro. This should not be getting traded to. This also, well, that's it, bro. Like this should not get traded to, but then look at the market structure, bro. It's obviously bearish. So what you do is two things. First, you have EQ of the range. EQ of the range, and second off, displacement. If we displace heavily through it, we're obviously bullish. But if we respect it and displace heavily downwards, then obviously we're bearish. It really is that simple. All I did was mark out EQ. And because I marked out EQ, I literally made $1,500 today. So let's get into the 1 minute chart. Right, so I'm short-term bullish to the 1 hour fair value gap. Let's see what happens. And my draw is taken. So now I go, bro, what is happening? I go, dude, I'm going to miss shorts. There's no 30-second. There wasn't even a 15-second gap. Yes, I looked at the 15-second because I love the reaction so much. I said, we literally have none of those draws. What are we going to do? And thankfully, we rip up. I'm like, oh my goodness, thank goodness, bro. And at this point, what am I thinking? Well, I'm thinking, okay, well, let's see where ES is at. Okay, ES just hit a 1 hour fair value gap as well. So now, again, I can see bearishness. We have true manipulation. If we get displacement to the downside, I'm super open to taking shorts. So what happens? We don't get the displacement. I was seeing this chop and I was like, bro, would I take a 30-second inversion here? Keep in mind, there was no 1 minute. And I was like, I don't know. We're just chopping. I don't really... If there was one candle that ended up displacing really heavily, I probably would have taken this trade because it is mechanically valid and the draw just seems so abundantly clear to me. But luckily, I wasn't forced with making that last-second decision, and instead I had this. So the first horrible trade of the day was this right here, bro. If you took this trade, I'm sorry. Two things. Number one, you suck. Number two, you got lucky. And number three, this trade isn't valid. Why is this trade not valid? Bro, Look at these little accumulation zones. Right off the bat, you can honestly just tell the market doesn't really know where it's going at all. You have random accumulation. It's like, okay, are we going down? Maybe not. Boom, jacked up. Okay, are we ready to go down? You go down a little bit, right? But why do I not like this trade? The reason why I don't like this trade at all, and the reason why I don't want to say you're buns if you took it, but you're definitely dog water. I will say I don't want to say buns, I'll say dog water. This 2-minute is getting held. You go, what do you mean it's getting held? I mean that, bro. I mean, it's literally getting held, bro. There's no other way to put it. If you took this 1-minute version, yes, you can justify it with the CISD and whatnot. But given the high resistance scenario, I'm not going to fade a 2-minute bullish gap. I'm waiting for this to get closed through, maybe even waiting for a CISD entry, something that proves to me that we want to go to these other high resistant draws, bro. Because if we're bullish, then this should be protected. If we're bullish, this should be protected. And obviously, if we're bullish, this should be protected. So it's like, okay, we have all these high resistance highs, and we're not even closing through the 2-minute. Should I take this trade? No, you shouldn't, gang. You really shouldn't. Not to mention, I definitely would put my stop loss like here, right, at like CE of the wick, and I would have lost. But where's your trade then? Where's your trade then? He asked. Where is the trade then? He asked. Let me show you, bro. Also, I guess this is mechanically valid because this is a 2-minute inversion. But this is what I took, bro. New leg of the manipulation leg. And this is what we got. We had an SMT at these highs. Why is this so important? SMTs show smart money. One asset sweeps liquidity when the other does not, and then both displace in the same direction. Because we had an SMT, it's showing that NASDAQ wants to be more bearish than ES wants to be bearish. You can see right here, we swept out that high on NQ. We did not sweep it out. That means NQ is yearning for bearishness, and the only thing stopping it was ES. Now that we have had that manipulation on ES, we've created that SMT. Smart money has swept the markets. We are ready to go to the downside. Now, what inversion do I want to take? I want to take this inversion right here. The highest time frame inversion in this manipulation leg. I want an IFG right here. Where do we get it? We get the IFG right here. And then I enter on this candle with a little bit of a better stop loss like here. And then I just put I put my stops right here. I wanted to put it right here, but this was the gap protecting me. And a lot of times you'll notice, look with the 2-minute. Look with the 2-minute right here. You go back to the 2-minute. What do we see right here? We see that we wicked heavily through it, but still respected it. So it's not necessarily like, oh, my trade's invalid if we fill the fair value gap. So I didn't want to pretend that's what it was. I wanted to give it breathing room, but I knew, okay, we have an SMT right here. We have really good displacement. If we go past here, we're definitely running this. Like, I'm not even worried about it. I throw my stop loss right here at the 50-minute intermediate low. And then obviously we have a 5-minute fair value gap right here. Now, I did completely forget something. I'm so sorry for skipping it, but this needs to be said. I took a long right here. Now, why did I take a long right here? Let me tell you exactly what I liked about these longs. What I liked about these longs was simple. Crazy displacement. We had an SMT at a 5-minute, and we showed great reaction. We didn't show great reaction the first time. What am I looking for? SMT. We didn't show great reaction the first time at all, dude. We did not show great reaction. We respected the 2-minute. We had an SMT with a 5-minute. We had amazing displacement. This trade wins. Not only that, but it's not just one swing high, but it's 2 swing highs. Looks beautiful. Unfortunately, like ES ripped up. This did not. I went break even at this SMT, bro. You're just going to have to trust me. I promise it happened, bro. I went break even at this SMT, which was like right here. Yeah, I guess I already marked it out. So it's right here. And then now I entered into my short positions again, right about here. I know I got a 1.3 RR, so we can just say that I entered basically right where the candle closed, which is probably true, right? And then we flush. I go break even right here. Why do I go break even right here? The reason I go break even is because it's a 5-minute and we're obviously choppy and we're trading high resistance to high resistance. One of my rules is simple. If we are trading high resistance to high resistance, I have to have a break even and I have to actually follow that break even. Why? My conviction is lower and price is uncertain. So why would I risk, why would I risk so much on a trade? As far as like risking losing it in worse conditions, right? Clean conditions, obviously bullish. Bro, I'm not going break even. choppy high time frame, weird, high resistance to high resistance. No one really knows where we're going. All I know is that in EQ of the range, we respected it. SMT at EQ of the range within a 1 hour fair value gap and showed great displacement out. All I know is I'm ripping that trade. My microphone stinks. I need to brush my teeth. And then we flush and we hit the draw. I almost got break even like 4 times here. You can see the delivery was low-key doo-doo. And that is for a reason, right? High resistance to high resistance, bro. These are conditions that you honestly can fade because they're not great. They're not great, right? We have high resistance here in the form of an SMT, but we create an SMT inside of a 1 hour at EQ of the range and showed great displacement out. Bro, it's a good trade. I'm not even going to lie to you. So I rip the trade. I take the setup. I almost get break even. Then we start chopping up right at a 1-to-1. Literally, bro, this was a 1-to-1 right here. Like this was a 1-to-1. I was like, bro, should I have gone? Like honestly, because of how choppy we were in the high resistance to high resistance, I'm not even kidding. I probably should have just gone for a 1-to-1 risk reward because again, this is high resistance. It doesn't have to get taken if it doesn't want to. And on days like this, bro, you get your money in, you get your money out. It is what it is. Then, unfortunately, the rest of not section, bro. I rebuke that. The rest of this session is extremely choppy. Now, why is it choppy? Bro, again, it's just market confusion. Like, to me, I think, right, if I don't really know what's going on, then no one knows what's going on, bro. No one, some super genius knows exactly what's going to happen. So what do you see here? You just see people buying and selling randomly, bro. This looks like random buying and selling. It doesn't look like accumulation for like a crazy manipulation distribution. It doesn't, bro. It just looks like the market doesn't know what's going on because conditions aren't clear. But that's why you have to utilize EQ and displacement in these kinds of conditions. I love y'all. I appreciate y'all. Bye-bye.